Howard Marks is one of the most respected investors of our time, known for his disciplined approach to risk management and contrarian thinking. As the co-founder of Oaktree Capital Management, he has managed billions of dollars and delivered outstanding returns by focusing on understanding market cycles, avoiding pitfalls, and identifying opportunities where others see uncertainty. In this in-depth discussion, we will explore the core principles that guide Mark's investment philosophy, drawing insights from his book, The Most Important Thing. By the end of this video, you will have a clearer understanding of how Marx navigates the markets and how you can apply these principles to your own investment strategy. Unlike many investors who chase high returns, Marx emphasizes that the real key to long-term success is superior risk management. If you avoid the losers, the winners will take care of themselves. Howard Marks. Managing risk does not mean avoiding it, but rather understanding and pricing it correctly. Most investors engage in first-level thinking, such as, this company is doing well, so I'll invest. Marx encourages second-level thinking, wherein everyone thinks this company is doing well, so it's likely overpriced. Where can I find opportunities that others overlook? This contrarian approach allows investors to capitalize on mispricings in the market. Markets move in cycles, boom and bust, greed and fear. Marx believes that recognizing where we are in the cycle can provide a huge advantage. There are times for aggressiveness and times for caution. Knowing the difference is everything. The role of psychology in investing. Investors often make mistakes due to emotional decision-making. Marx warns against herd mentality, wherein everyone is optimistic, prices are inflated. When everyone is pessimistic, there are bargains to be found. He advises investors to be skeptical of conventional wisdom and seek opportunities in areas others ignore. Finding value in unpopular assets. Marx believes in buying quality assets when they are undervalued, not when they are popular. He often invests in distressed debt, real estate, and credit markets when they are out of favor. Example, during the 2008 financial crisis, Oaktree Capital invested heavily in distressed assets, which later rebounded significantly. Next is the margin of safety principle. So this was inspired by Benjamin Graham and Warren Buffett. Marx emphasizes a margin of safety, that is, buying assets below their intrinsic value to reduce downside risk. This approach provides protection in case the market moves against an investor expectations. Another strategy of Marx is controlling emotions and avoiding pitfalls. The dangers of FOMO, or fear of missing out. Marx warns that chasing hot trends or stocks leads to poor decision-making. If we look at the stock market today, most of the stocks that I have in my portfolio are up 10% and even 50%, which makes me think everyone is buying, that it overinflated the price. The best opportunities often arise when investors have the patience to wait for mispriced assets. Avoiding overconfidence and biases is another strategy. Marx acknowledges that even experienced investors make mistakes due to cognitive biases. Being aware of psychological tendencies like overconfidence, confirmation bias, and anchoring can help investors make more rational decisions. How can we apply Howard Marks principles to your portfolio? First is focus on risk-adjusted returns. Instead of chasing high returns, focus on achieving consistent risk-adjusted growth. Second is think contrarian, but be patient. Investing when others are fearful can lead to great returns, but timing is crucial and also a bit of luck. Mark suggests waiting for favorable conditions rather than rushing into trades based on hype. We can see this in stocks and even in crypto. I was one of the people who actually bought some crypto and staked it in BlockFi, which by now you know is bankrupt. They tried to send back the money that I lost, but it was still not the whole investment that I've put in. One hard lesson I have learned from this is I didn't do my due diligence and chose to believe an influencer online for his advice. I went with the crowd and lost money along the way. But one thing that annoys me a bit is that influencer actually sold his crypto holding, got his earnings, and then told his followers about the bankruptcy. Moving forward, I have learned to not put all of my eggs in one basket and to risk only the money that I can afford to see the price go up or down without liquidating all the assets just because I need it for an emergency. The third way that we could use Howard's principle is diversification and asset allocation. In addition, Oaktree Capital is known for diversifying across asset classes, including high-yield bonds, distressed debt, and real estate. Investors should build portfolios that can withstand economic fluctuations. In conclusion, Howard Marks' investment philosophy revolves around risk control, understanding market cycles, and disciplined decision-making. His ability to think independently and challenge conventional market sentiment has allowed him to generate extraordinary returns while minimizing downside risk. By applying these principles, risk management, contrarian thinking, and patience, you can improve your own investment strategy and navigate the complexities of financial markets more effectively. Remember, the key to long-term investing isn't just about making money. It's about preserving capital and making smart, risk-adjusted decisions. Thank you for watching this video, and I hope that you enjoyed it. Please do like and subscribe because it will help greatly for the channel to grow. Also, leave a comment on what you would like me to discuss about on the next video, or how you are in your investing journey. Please do share what are the struggles that you get, and we'll see you soon. Ciao.